Well, this morning, USDA released their weekly export sales report. Let's take a look at some of the numbers and see what you think. On the corn, we had over 1 million tons sold again last week, 1.27 million tons. Soybeans had a fairly hefty amount, 1.7 million tons. Soy meal, 128,800 tons. Soy oil, only 1,200 though. And the wheat, a fairly paltry 264,700 tons. Interesting on the grain sorghum side, out in the plains, we call it Milo, but we had net reductions, and there was a fairly hefty amount to the downside. They had a negative 53,600 tons. And upland cotton, that was kind of a low number, 186,600 running bales. The rice, 64,700 tons last week. As we look at our market activity, and again, I'll remind you, we had no overnight flash sales today. Let's go to the corn board here, and it's really been struggling all day long. We have the May corn down a dime. July is your active contract. It's down 9. We're at 8.01. We have the new crop December corn now trading 6.5 lower at 7.42 per bushel. Over on the soybean trade, it's been kind of dragging its heels, but we have July now firming up a little bit, 2.5 cents higher at 17.19.5. So it's off of its earlier low by 15 cents now. And now you have November new crop soybeans gaining 5.25 cents. We're at 15.34 3/4. So what had been a very negative market in the beans is now starting to turn upward. Meanwhile, in the wheat, you still have July Chicago wheat dropping 9.25 cents. We're at 10.88 1/4. We had a low that was about 6 cents lower than where we are now. July KC wheat down 7 cents. If you look at Minneapolis spring wheat, we're currently trading 3 3/4 cents higher at 11.76. Ted Seifried joins us now. He's with Zaner Ag Hedge in Chicago. So, Ted, when you look at the overall performance here on the grain trade so far, are you just assuming this to be a little bit of profit taking?
Yeah, sure, profit taking. I mean, look, I think what we're doing in corn is we're taking a little bit of a breather and kind of trading sideways for a second. We're going to call that a bull flag pennant at the moment. But, export sales weren't all that impressive. Well, let's say this. They weren't bad numbers for corn, but we knew a little over 1 million metric tons had gone to China. We were hoping that we were going to see a bunch more on top of that from other countries. That didn't happen. So now it makes you kind of wonder a little bit, are we starting to price ration a little bit here? I honestly don't think so. I think that we just saw an off week for export sales. I think those sales will still be there because, we're starting to get concerned about that Brazilian second season crop. We're still concerned about whether Ukraine's planting or not. We're still very concerned about whether we're going to get in our corn crop on time. I think it's just a one-off, and the market starts to shrug that off now. The soybean sales were really good, but that was really all in new crop. Old crop bean sales are kind of slowing down a little bit, but the fact that they're still there at this time of year says something to me. I still think we're going to see a really rather tight soybean balance sheet by the time we get to the end of this marketing year. I think the trade needs to respect that, and we do need to slow that soybean demand down. So again, just a little bit of a reaction to, again, they weren't bad numbers, but a little bit disappointing numbers for export sales. I think we're shrugging it off. Look at crude oil going higher. Just a little bit of profit taking on a Thursday morning. That's all. That's really all I saw.
Oh, and I know Christina was just talking about the fact that there are wind warnings out in the plains, and Nebraska was the only one of the states in that I-80 corridor that had corn planting progress reported as of last Sunday. And that was only 2%, but they're talking 70-mile-an-hour winds in Nebraska tomorrow, and not necessarily ideal conditions to get that new crop going. Ted, sit tight if you would, and we'll come back and examine our cattle and hog markets here on a Thursday when we come back after this. Let's go back to Ted Seifried and talk more about our livestock trade this time. And Ted, we had beef and pork export numbers that came out this morning. They left a little bit to be desired there. So what does that all mean as we move forward now past this Easter holiday break?
Yeah, that pork number in particular. I mean, the beef number, you'd like to see that higher, but the pork number, that was the one that was really disappointing. I don't know. Again, you can say we're getting up to some higher prices, and similar to grains. Are we rationing demand here at these higher prices? And I don't know. I really don't think longer term we are. I think it was just an off week for export sales as a whole. As the global economy is paying a whole lot of attention to what's going on in Russia and Ukraine. And there are some current concerns out there, but overall, I really do think consumer demand, both domestically and abroad, is very much there. I don't think we're done with this inflationary round of activity. So people are willing to pay these higher prices. I think they will come back, but you have to take a little bit of pause, especially on that pork export sales number. And it comes at not a great time because, we were trying to kind of build a base on a chart to go up and test these recent highs. This might give us a little bit of a pause there. But like I've been saying, I really do feel like domestic demand is going to be very strong going into spring and summer for this grilling season. I think demand for everything is going to be really hot and heavy this summer. We, for 2+ years, have been very pent up and wanting to go out and do things. And finally, we're at the point where we are really free to move about the cabin, literally and figuratively. And I think we will really do that very much so. I've been pointing at the summer of love, and I think that's exactly what we're going to see. So I'm optimistic, very optimistic. I think the doubters will be put to rest as far as what our domestic demand is going to be like for for beef and pork. And I think that will start as soon as the weather starts getting nicer. Should be any time now, right?
Yep, I've been barbecuing every chance I get. Ted, we're going to take a look at prices here. Let's go to live cattle, and on the big board here, our quotes are provided by bar chart. We're higher, but not by a whole lot. June live cattle up 42 at 139.05. On the feeder cattle side, well, they are mainly higher. May is up 40 cents at 162.87. Thought maybe they'd be a little stronger with the weakness in the corn, but that's about all they can muster right now. Lean hogs, June down $1.07 at 117.67. Thanks for talking with us, Ted. You have a great week out there, and we'll talk to you soon. Ted Seifried of Zaner Ag Hedge. He's based in Chicago. Suzanne, I'll turn it back to you. Christina was on the other side.
You're surrounded by women, Marlon. I understand.